Hello traders, you are welcome to this video, and I especially welcome you back to the Forex Geek channel. If you are serious about improving your Forex trading skills, then you are in the right place. In this video, we are going to be unlocking the secrets behind something that can drastically improve your market analysis, and that is what we call failure swings. Okay, so whether you are a beginner or a seasoned trader, understanding failure swings is crucial to becoming a better trader. Okay, we're just going to break down exactly what failure swings are, how to identify them, and how they can help you fine-tune your strategy. But before we dive in, if you haven't already, make sure to hit that like button and subscribe to the channel so you don't miss out on more valuable content like this. Let us get started. Now, first things first, what exactly are failure swings? What are failure swings? In the simplest terms, a failure swing occurs when the price movement fails to continue in the direction that traders expect. In simple terms, that's just what it means. All right. So let us look for an example before I move ahead, right? Before I proceed further. In this chart, we can see that we had a bullish trend here, right? We can see this is an obvious bullish trend. Now, I want to ask you a question. What happens when there is a breakout? When there is a breakout, we expect a valid breakout, not a false breakout, right? Because a false breakout happens when after the breakout, just shortly afterwards, we have price getting back into the breakout zone, right? Like getting back in the direction of the trend. But in this case, we actually had a valid breakout because the price did not immediately go back into the the channel, the bullish channel, because this was a bullish channel, right? It was a bullish channel. So we did not have price immediately go back into the bullish channel. In fact, we had something like a retest. Remember that after a breakout, there's usually a retest of that breakout point. So we can see that this was our breakout point, right? And we even had price come back to retest that breakout point and now started coming down. So ideally, traders are expecting this move to continue downwards because the principles of breakout has already played out. The principles of breakout has already played out around here. We had a bullish trend. We had price break below the trend. We had price retest the breakout point, and we had price continue the downward movement. So traders are expecting a sell trend to continue. But failure swing occurs when a price movement fails to continue in the direction that traders expect. So we had a failure swing around here because to the surprise of traders, the bullish move continued. After the principles of breakouts has already played out, we had the bullish move resume. Okay, so it's essentially a signal that the market might be reversing or about to experience a significant change in direction. That is what failure swings represent. Okay, now I know that sounds like a lot of jargon, but stick with me as we go through this concept of failure swings. I will show you, as I already showed you, a practical example. Yes, so I will try to break it down in a manner that will be easy to understand. All right, so another example in terms of explanation is for you to understand how to identify a failure swing on your own. All right, when the market is making a higher high, right, and then it pulls back. Okay, now traders might expect the price to continue higher, right? But if the price fails to break the previous high and starts reversing, that is a failure swing. Okay, so now basically what you should understand with failure swing is a particular pattern that is known. For example, we have a bullish structure, and a bullish structure is categorized by higher highs and higher lows. When a bullish structure is broken, because it is a bullish structure, traders anticipate continuous higher highs and higher lows, right? Until the structure is broken. So when the structure is broken, you've got a failure swing. And then, that is another example, right? And then in this first example I gave, when you have a breakout and you have a retest of the breakout and you have a bearish move, a new pattern has been formed and traders expect lower highs and lower lows to continue forming or to start forming. And then suddenly you have a change in structure. So traders' expectations have been breached again. So that is what we call failure swing. Okay, so basically failure swings is just when something that is against traders' expectations and not expectations based on hope. All right, we're talking about price action expectations, expectations that are in line with standard market action, right? Standard price action. Okay, so when you have a change in the normal structure of price, right? Like bullish structure and you have a change, or a breakout structure and you have a change. We call that failure swings. Okay, so now that you understand the concept of failure swings, the next question is, how do you take advantage of it? Or what you might be asking, why do failure swings even matter? What do you need it for? Right? You might be wondering, why should you care about this pattern in your trading strategy? Now, failure swings are valuable because they give you an early warning of a trend reversal. Okay? They give you an early warning of a trend reversal. Now, if you can spot them before others do, you are ahead of the curve. So these patterns show that the current trend might be losing momentum. When the price fails to continue in the direction you expected, that's a signal to reassess your position. All right? So traders who don't recognize failure swings can end up riding trends too long, which results in bigger losses when the trend finally reverses. But if you can catch these shifts early, you can adjust your strategy and minimize risk. So when you notice that price has changed from the normal structure of price action, then you should reassess your position. If you are in a bullish trend and you notice a break of structure, you should reassess your position, all right? You should exit your buy if you are in a buy trade, right? And then in the case of a sell or in the case of a breakout, and you had a breakout structure form, and let's say you, after the retest, you see this bearish candlestick pattern. Let's say you enter the sell around here and you set your stop loss around here, and then you already drew a trend line because ideally you are expecting to see lower highs and lower lows, right? So we can see this was a high, this was a lower high, there's another lower high. So suddenly you had price break above this trend line. You should reassess your position. If you had entered the sell around here, you should exit your sell before it gets into a loss. So once you notice a change in the structure, right, the ideal structure, then you should reassess your position. When you identify a failure swing on time, do not wait for your winning trade to turn into a losing trade before you close the trade. All right? So, now that we know what failure swings are and why they matter, let's talk about how to incorporate them into your trading strategy. One of the most effective ways to use failure swings is in conjunction with other technical indicators like RSI or MACD, any other indicator of your choice. Now, these indicators can help you confirm whether a failure swing is part of a broader trend reversal or just a small pullback in the market. For example, let's say you spot a failure swing on the chart. Let me just add on the RSI to the chart, right? So you spot a failure swing on the chart, and at the same time you have the RSI showing overbought conditions. For example, well, this was not exactly in overbought conditions, but was close, right? But let's say you have the RSI showing you overbought conditions or really close to overbought conditions. Now this gives you even more confirmation that the market is likely to reverse soon. Okay, like in this case. So another great way to use failure swings is by incorporating them into your risk management plan. if you are trading on a longer time frame, or whether, okay, let's say if you're trading on the hourly time frames or maybe the daily time frame or higher, and you see a failure swing, this could indicate that the price is about to pull back or reverse. In this case, you might want to tighten your stop loss or take partial profits to lock in gains. Okay, remember, trading is all about managing risk. So when you see a failure swing, it's not just about catching the reversal, it's about making sure you are positioned correctly to minimize risk. Okay, now as powerful as failure swings can be, they are not foolproof. So here are some common mistakes that traders make when trying to trade failure swings. One mistake is jumping in too soon. Just because you see a failure swing doesn't mean the market will reverse right away. Sometimes the price might make multiple attempts to break a level before it finally does. Okay, so if you jump in too early, you might get stopped out before the reversal happens. Another mistake is not confirming the failure swing with other indicators. Remember, failure swings are only one piece of the puzzle. Without confirmation from other tools like trend lines, volume or momentum indicators such as the RSI or the MACD or stochastic oscillator, you know, you could end up trading false signals. Okay, and you wouldn't want that, right? So to wrap it up, failure swings are a key pattern every forex trader should understand. They can give you a heads up on trend reversals and help you avoid getting stuck in losing positions. By learning how to spot them, confirming them with other indicators, and incorporating them into your overall strategy, you can improve your trading precision. Now, if you found this video helpful, please give it a like and don't forget to subscribe to the channel for more Forex tips. Let me know in the comments if you've ever traded based on failure swings and how it worked out for you. I'd love to hear your thoughts. Until next time, happy trading.